Thank you, everybody, for joining us. Appreciate LPShares for setting up this opportunity for us to talk to you. We're going to talk about modular construction trends and opportunities. So if that title makes sense to you, you're in the right place. If not, sorry, wrong web room. But I've got my colleague Jeff with me today. We're going to talk about this topic. This is the agenda for today. We'll give you a quick intro on who we are, just so you have some backdrop. We'll talk a little bit about macro housing, kind of what's happening in the world of housing. Residential housing, and really that kind of informs modular and kind of why this play with modular construction makes sense. Then we'll talk about our experience in Austin, and then a little bit about how you can profit from it, and that dovetails into a little bit about what we're doing. But that's the agenda for today. So and you'll see already those are some lovely pictures of what modular construction can do. Disclaimers: this is an educational, informational session. This is, lawyery stuff, but, look, this is the financials and all the stuff here. If you're going to get into a deal, if you're going to invest in something like this, if you're going to take on modular construction yourself, just know that, do your own diligence and all of that. This is an educational kind of perspective piece for you to chew on. All right, so Jeff and I, who we are. So we're best friends. So we go back to childhood. We've known each other since grade school. Our moms were in the PTA together. So we're investors at heart. That's really what's important to us. We're not deal junkies. We don't do tons of projects. We do things that make sense. We do things that are kind of really with an investor focus in mind. And we love it. It's really exciting for us. Okay, it really starts with macro housing considerations. And just a point I'll make on our backgrounds, right? We've got some development experience in conventional stick builds. We've got a few built to rent communities, and two of them are ground up developments in Houston that we've done. And these were, 129 and 146 units respectively. So we understand how development works and some of the challenges with conventional development. And so we really got excited when we started to engage kind of the modular world. But the backdrop for all of that is really macro housing considerations. So when we think about that, you hear the headline a lot, but there is a severe shortage of housing in the U.S. Some of that was exacerbated by some of the new immigrants that have come into the country, but really it's been a long-standing problem. And part of the reason is that builders have really underbuilt in the space of single-family housing in general for some time. And so I'll show you some graphs later that are going to show you what that means. But really, in a lot of the major metros, there's just not enough housing. And so some government's trying to deal with that by passing legislation and doing other kinds of interesting things. But the inventory is pretty low, and really there just aren't enough doors, not enough places for people to live. You see some of the reasons there. There's shortages in California and Texas. Now, California has its own dynamics in terms of development that make it a little harder to develop here. That's where we're located. So I can tell you it's not as friendly as a place like Texas, but there's shortages throughout. Interest rates, a lot of other uncertainty with building costs and things made it hard for builders really to get into the space with confidence. And then what you're seeing is a lot of the stuff that's been built has been built, way out of city centers and to, deep into other suburban areas. But all this to say, severe housing shortage. This graph kind of shows you through 2023. It's kind of an interesting graph. The green line is nominally what we need to build essentially to kind of keep housing on pace with supply and on pace with demand a bit. And then ever since, of course, the big great financial crisis, which was caused by real estate, and some of the, let's say, overdevelopment and bad lending, the development community has been pretty spooked, right? And so they've really underbuilt. And it's only been in recent times that they had a bit of a spike during kind of the COVID era, but it's kind of come back down a bit. And remember, it's not that in any one year, if you build to kind of nominal that you recover, you've got all of this catch up to do where there's been an undersupplied market for a long time. So this graph kind of interestingly sort of shows that gap. So all that white space is essentially homes that we need that we haven't built. So this is part of the thing that just kind of exacerbates the problem. And then single family housing's remained resilient. So, even with some places where the economy, people are like, well, maybe the economy is a little off or this or that. we've really seen the housing market remain very strong, even in the face of high interest rates and all the rest of it. And part of that is that there's a lock-in effect you'll hear about, that you may have heard about, which is people that have owned their homes for many years that either have a fully paid off mortgage and they're just sitting there content, or they have very, very low rate on their mortgage. If you were smart enough to refi as the rates were very, very low, I have friends that have mortgages down in the twos. It's not, in 2020, 2021, you could get a 30-year fixed mortgage in the twos. And that's pretty incredible, sub three for sure. If you've got that loan, you're not giving it up, right? You buying your neighbor's house at the same price would double your mortgage payment, right? So all this stuff is a problem, and it's keeping people locked in their homes. There's no reason for them to sell that asset. So that's contributing to it. There's this new supply. There's a low supply of new homes because a lot of the builders and builders can't build fast enough, and there's the cost of doing it is high. So all of that's really contributing to lower supply. It's just a supply demand game, and so single family housing has remained pretty solid in terms of pricing. Mortgage rates, there's some talk about where it's going. I think we anticipate that it's going to come down as we go into 2025. It spiked up a little bit here recently, but I think directionally people think it's gonna come down. And I think the other thing is it really hasn't massively affected pricing. There's been some slowing of home sales maybe, but and again, it's very local phenomena. All real estate market is kind of a local phenomena. But I think that generally speaking, we probably would say mortgage rates are going to go down slightly, probably not to what we saw 2 or 3 years ago, but they will come down a bit, we believe. And that should help additionally kind of with housing prices, keeping them high. Okay, so a little bit on prefabs. That's the backdrop on housing. So prefab modular. So why do this? Well, it's pretty lucrative approach to single family housing development. So there's really a couple of major things that matter. So one is there's really so think about it this way. This is a factory built home. So it's a home. It's no different than any house you'd see, except that it was built in a factory and then transported in pieces and then put together on the site like Lego blocks. One of the things for me personally, and I think Jeff to some extent was getting over the fact of, you got to be kidding, how nice could these homes be? Because modular, when I grew up, was ugly. It was ugly stuff, and it was like utilitarian in design and pretty bad. And so we were surprised as we sort of dug into this how beautiful and how appealing some of these homes are. Both the builds and the design sensibilities, in terms of quality and all that, are really quite nice. And there's plenty of homes you walk into, you have no idea it's modularly built. You have no idea, frankly. And maybe if you're a builder, you might have some sense of it, but really, from the average consumer, it's a home, and it's a beautiful home, and it's a new home. So it's lower cost to build these. Now, part of that is both the cost in absolute dollars to build them because of the efficiency of the factory, but the other is the carrying cost. So it's much faster to build these homes. And you'll see kind of a timeline we'll share with you in a second. So when you couple those two together, both the absolute dollar cost and then the speed, which really lowers your carrying cost of that, construction loan, construction debt, or land loan, whatever you've got, it really adds up to tremendous savings. Quick cash conversion. Now, what does that mean? It means that if you've got money in an operation, if you can build that home faster, you can get it to market and sell it faster. You get your money out quicker. You can redeploy it. So your ability to cycle cash is quite a bit higher. Process benefits. It's built in a factory, so you don't have like weather issues. You don't have, it's built kind of the same way. I don't know if any of you guys have walked on a construction site, but I'll tell you, no two are the same. There's junk everywhere. People show up, they don't show up, they come and go. I mean, the factory's got stuff on a line, things are moving, there's dedicated crews working on it. It's run like a factory, and there is operational efficiency in that. You have decreased waste. So from just a doing good for the environment, there's decreased construction waste, the energy consumption's better. Frankly, the impact to the neighborhood in terms of You don't have a bunch of you don't have as much construction activity in the neighborhood for as long of a period of time. So there's just general impact is lower than conventional stick build. And so there's all of these things from an investment standpoint translate into higher returns. So on the cost advantage, you reduce labor cost by a lot. You also reduce, I would say, labor predictability. I can't tell you how many times, in development projects we've been involved on, somebody quits, this happens, that happens, crews are double booked, they show up late. It just you reduce a lot of the inefficiencies there, and so overall you get reduced labor cost. The material efficiency, it's a factory, right? Things are built, things are planned, not everything is bespoke. You've got some standardization that helps you get material efficiency and some designs that you've thought through those material efficiencies that you can then repurpose for your specific deployment. Minimize weather impact. Well, a factory is a factory. It's covered. It's got a roof. Things are happening inside the factory, whether it's raining, snowing, whatever's going on. For those of you that have ever done any development outdoors, which is where it usually happens, weather impacts you can be out a whole week, 2 weeks, depending on what's going on. The materials aren't subjected to the weather, right? I've seen frame ups that have gone up and the frame sits there forever and ever and ever while the developer is trying to get more money or something. And you're like, what's happened to this wood? And then the last one is interesting. It's this idea of flexibility and yet standardization. So from a design perspective. So what's interesting there is, we have these standard kind of modules, you've got rectangular blocks. Think of them as Legos that you can, so they're standard in that regard, but then you can configure them in all sorts of ways to give you different footprint and different scale. And then the insides of them can be finished out very differently. And they're finished out at the factory. So cabinetry, plumbing, all that stuff is in, but you can determine what you want to do in terms of those designs to kind of finish them out. So you have, again, the mainframe, so to speak, the major components are standardized, but then you've got design flexibility galore in terms of how you put that together. Very much like a box of Legos, right? The Legos are the standard block, but you can build anything you want with those standard blocks. So that's kind of the advantages we see, and all that gives you this cost advantage and build beautiful products. This graph shows you kind of the faster time to completion. So what are we looking at here? Put your eyes on that chart, that top, the black kind of Gantt chart there, that's showing you kind of conventional site-built product. And then below that is the prefab modular. So in the site build, everything is serial. What does that mean? It means, you can't go to the next step till you finish the one ahead of it. So you purchase the property, you got planning and design. Planning and design can take a long time. You're iterating with the city, you're doing all the things you need to do, you're getting your approvals. Well, in our case, for the modular, what's interesting is that, we're building in Texas, and you'll hear a little bit about that later, but what happens is, in Texas anyway, is all of the planning and all of those designs. Well, let's start with the engineering. So the engineering on the modules and on those designs is already stamped and approved at the state level. So the state has already said, hey, this is fine, this can be landed. So when it comes to the city isn't redoing those engineering approvals. Really, all they're doing is making sure that your coverage ratios are right and your setbacks are correct and those sorts of things. So it's a very, very minimal process, at least, in our case, what we're doing to get through permitting. So you're not doing these design iterations and don't change this, change that. So what could be easily 5-6 months is more like a month or two, right? So it's quite a bit faster. The next step is the foundation. So we still have to build foundations for these. So that's similar time, a little shorter perhaps. But while the foundation's happening, what's great is the offsite manufacturing is happening in the factory. So you know what you're going to build from the time you get the land. So you've already got some standard designs. You tweak them slightly for what you're doing at that site. And then you're laying the foundation while you're getting the modules put together. And then when the foundation's done, you're sort of ready to land these homes. So then you just deliver the homes. It's a 1-day kind of truck ride on bring those modules from the factory to the site, and then these things go in with a crane, and you basically land these things that are basically finished blocks, tie them all together, do the on-site installation, and you're done. So all of this put together, you can see from the on-site construction, this foundation, all of that at the top on this conventional is very, very linear, very, very serial. And it's a little uncertain because delays can happen that are unpredictable. So you wind up with maybe an 18-month timeline. We're looking at, half of that, if not better. So it's quite a bit of a time savings. So again, that's just less overall impact, quicker time to deliver the product to market, more efficient use of cash, and the carrying costs are much lower. So it's just really all in is a win. And then we're building pretty stuff, right? So this is an example of a home that's modularly built. This is one of the early homes that was built by our developer partner, about 1,800 square feet, 3-bed, 2-bath. But it's a beautiful house. In fact, we were just there last week looking around, and we drove by and checked it out again. The inside, you can see 9-foot ceilings. So the design sensibilities are there, like open floor plans, big windows to let in a lot of light. So all of the modern design sensibilities are incorporated in these modular designs.
And the finishes, right? You can really determine what are the right finishes. In this particular case, it's all hard surfaces, stainless steel undermount sink, right? So I mean, these are beautiful homes. And we even have some luxury versions of these where, again, you just really uplift all of those finishes to be competitive with that neighborhood. And to the people looking at these homes, they're just homes. They don't see any difference.
Yeah, absolutely. So that's a bit about modular. We want to introduce modular. We think modular is going to play a significant role in, frankly, all building, probably not just single family, but even in, multifamily. There's a lot of countries in the world where they do prefab, precast construction using concrete and other materials. So it's really, to some extent, maybe the future. And so people ought to be paying attention to it. And I think it'll change the way we build stuff. Okay, so Austin. So just a bit about Austin. Like, why did we pick Austin? So I won't spend too much time on the backdrop of Austin, but it's a fast-growing market. So I think if you're going to build anywhere, I mean, remember, business buildings, and places people live. People go there because of jobs. People go there because of population growth and all that. So if you don't have a city that's got good tailwinds, probably not a great place to think about building. But if you got good tailwinds in the city, which we think we have in Austin, we predict, or others predict, and we're just going off their data, that the Austin Round Rock as a metro, it should see significant growth for a significant period of time. Job growth is there. There's a lot of diversity also in the job growth, which I like. It's not a one-trick pony kind of pretty diversified place. You hear a lot about tech, but it's got a lot of other underpinnings too. So payroll growth expected to grow and growing, and also just a nice place to live. So there's plenty of cities that are growing that I might not necessarily want to live in, but Austin's quite nice for anybody that's been there as a kind of a cultural mecca too. Lots going on there. So a neat city. Job growth outpacing housing supply is kind of key. So anytime you have jobs being created, household formation happening, and not enough, job growth is huge, and then the housing isn't keeping up, you ought to have good tailwinds in terms of price stability, or prices moving up on those assets. And look, we're investors, so that's the kind of thing we look for as an opportunistic play. So this is all the kind of data we think through, and in fact, in much more agonizing detail, but it gives you directionally a sense of how we think about markets. So then the modular strategy for us here was, a lot of real estate plays are to hold them long term. In this case, we're buying, building, and selling. So what are we doing? So what's happened in Austin, or what we're doing, is we're working with our developer, who has for a few years now been buying infill lots in nice neighborhoods. So this is, not in the far-flung, outskirts of town, but in city center, essentially, in established neighborhoods where there's either an old house that we can tear down, or a lot that was just one empty lot among, what they call infill lots among a bunch of other lots. So we'll come in and buy that either raw land or that older home. We tear that down, we build a new modular, and then sell it. Now, our developer has been doing this for a few years and doing one at a time, but they've changed the zoning, and I'll talk about that in just a second. But really, it's buy, build new, and sell. That's the strategy for the fund that we're working on. As I said, it's proven. So our developer and partner has been doing this for a few years now. Is another picture of a beautiful modular home. There's about 20 million track record of completed and ongoing homes. This is all stuff he was kind of doing with his own money, kind of 1-2 houses here and there, and then was really kind of amplifying that now. And there's about 40 odd plus people that are trained over that time that are installers and either GCs. He's also in the meantime put in his own crew, in-house, but really has the infrastructure effectively worked out to do all of this, and has been doing a nice job and profitable job building these homes. In Austin, again, this is showing the cost here. Traditional construction was taking about 300 a square foot. That's dropped to about 200. Along the way, it was down to about 250. You see, we're now at about 200 a square foot. And again, always looking for factory efficiencies to make that better and have a strong partnership with the factory as well to help ensure that that's the case. And then in terms of months to completion, we can get as low as 4 months from the time we're ready to go and permitted and everything's in place to the time that we've got finished product. So we don't underwrite it to 4 months. We underwrite it more to like 9 months just to give ourselves plenty of headroom.
And that's also to go through the sales process as well. Go through a complete sales process. Yeah.
It's massively compressed doing it this way using prefab modular. On the supply chain side, the number of folks are building modular now. It's kind of catching on. The key is really having a partner that you've got trust and a working rhythm with. And so we've got a partner that has been in business 40 years here. They were done a lot of the projects, have already gone through them, and there's a new facility in New Mexico that opened up. We're using one in South Carolina. The new facility in New Mexico is now reducing the shipping time to a day. There's ample supply that we can get out of there, and our developers got a relationship with the supply chain company to ensure that all that's in place and working. And it's just beautiful. Like seeing pictures of the factory, it's just this is some of the pictures of the site and everything. But when you go in and look at this stuff, it's pretty impressive how they bang out these modules. But so that's all part of it. So you didn't have to be sure if you're getting into this space, like, what does your supply chain look like? This is a significant part of it. So making sure you have that wired and understand the flow is important, because this essentially becomes, this is your construction, right? Is all happening at this level. So making sure you've got good supply there is important. The other is like, well, what do these sell for? I mean, one of the things that I was, I told you I was a little skeptical about modular. I said, oh, that's ugly stuff, right? No, it's pretty. Well, okay, but does it sell? And sure enough, it sells. So these are examples of properties that sold. So the ones in green, so what we're doing here is kind of showing you modular built properties in green relative to stick-built comps, more conventionally built comps in yellow, and kind of showing you this couple-year range from the last one at the bottom there, February of 22 to February of 24. Like, here's examples of things that have sold. And, these are things that were done outside of our fund, right? But they were done, just David was doing them organically, kind of himself, right, with his company, and just proving out the model. And what you can see is the square footage and the price point, but I'll focus kind of on the price per square foot, because that's, a pretty good
And just in case that isn't clear, different neighborhoods are trading at different price per square foot. So there might be a 400 a foot neighborhood, and there are $700 a foot neighborhoods.
Yeah. So in that first one, like that Bissell, you can see, the price point was obviously higher. Now it's a new home, right? So new homes the modular is a new home, so it commands maybe a bit of a premium over other older homes, but you can see from a price per square foot, we commanded a pretty strong price per square foot on the Brighton home, kind of in the pocket for sure. Definitely, held its own, in that range. Waldorf, did much better, and Camelot, kind of slightly higher than the others. So, you can see that there's really, good evidence that shows us and demonstrates that this is working, right? And so it gave us a lot of confidence going into doing more of this and amping it up, that, we could sell these homes and turn a profit for ourselves and investors. The sweet part of this is that as we were talking last year, so like toward the end of last year, mid-end of last year, about really putting something together and doing more in Austin, it became clear that Austin was doing some saber rattling about changing their zoning. And sure enough, in February of this year, they did that. And so what does that mean? It means they're allowing more homes per lot. So the new zoning within Austin's city limits, and I'm told that it extends a little bit outside of that, but for sure within Austin's city limits, they're allowing up to 3 homes per lot. So you could take either an empty lot or a lot that had 1 house on it, scrape that house and put up to 3 homes. Now, you have to make sure you have enough room to do that. The coverage ratios have to be there, all of that sort of thing. But it really opens up opportunity and changes the economics radically. So why is Austin doing this? They have the same problem that a lot of bigger and growing cities have, is a housing shortage. And so this is their answer to that. And I can tell you, in just about every metro that you see where there's density of population, houses are going more vertical, yards are getting smaller. My kids, your kids, they'll have smaller homes than maybe the sprawling ranch style homes that people are used to. So it is a real phenomenon. It's actually changing the way people live. People are living kind of a little smaller with smaller yards and this and that. And I think it's here to stay. So Austin's done this. And so we heard that was going to happen. It's a big opportunity. It's one that we're really early to because we're already doing modular. So it's something we can very, very quickly do. So we talked about the efficiency because the modular is already approved in Texas. We can just jump in and start building as opposed to going through a bunch of planning. So not only are we early in doing modular, but modular lends itself to moving faster. So we can kind of quickly deploy or quickly act on this new legislation and get things going. And in fact, already building under it. So this is a picture. This slide shows you we're the first developer to do this. And there's actually, it's a little hard to see. I apologize. So you're not going to read all of this, but what you might be able to take away from this is that there's 3 lots here. 3 lots are kind of vertical. Think of them as 3 vertical lots next to each other where 3 homes were. But what we've done with these are able to put 9 homes on these 3 lots. So it's pretty interesting. And you're able to, as long as you have on one side, there's, a street on one side, a street on the other side. So as long as you have like the ingress and egress and you can put the driveways in and you have the right setbacks, they'll let you do this. So in this case, there's some smaller units on one side, larger unit on the other, but it's a way to really get density. And then on the other side, you can see the homes dropping. And so these were dropped sometime back. And again, this is not one that was in our fund that we have just put together kind of more recently. But David, our developer, was the first to get into this. I think the very first permit was issued to him in Austin to do this. So we're pretty excited. And that permitting process, while it had a little bit of slowdown because they were new to just getting the paperwork in place, it was pretty smooth, and it's been really smooth since.
So second permit was faster than the first permit. The first permit was the one that had to test the new process, right, in Austin.
Yeah, we're like, who stamps this? We're like, oh, we don't have that person hired yet. So, that kind of stuff. So we helped them kind of develop the process. And the picture to the right is kind of cool. It shows you one of these, how these land. They land with a crane. They actually just come out there a couple of days, take this crane and boom, boom, just drop these module chunks, Lego blocks, I should say, in place. And then they finish them out and do what they need to do to, they can be stacked, they can be orthogonally put together, perpendicular to each other, all kinds of stuff. You've got the land, you've got the design to make sense of the land. You can really do a lot. So pretty cool stuff. I'll leave you with a couple of examples here. Let's talk about the economics. This is the Walnut Hills project. I'll show you 2 of these examples. So this is a 2-lot infill site where we're building 6 homes. This is in our fund that we put together. It's one of the properties in our fund, one of the projects, I should say, that's in our fund. And so off to the left, you kind of see the basics, right? So you've got basic metrics. You have 2 lots, 3 houses a lot, 6 total houses. The homes we're building are about 1664 square feet. So they're decent sized homes, but not huge. So it's just under 10,000 square feet that we're building. The land was 670, closing cost on the land. So I'm in the middle box here, where you really work through all of most of the financials and costs here. So the sources and uses. So land cost, closing cost, construction cost. So this is all of the built modules, the landing cost, all of that. is about 2 million. So you get to about 2.7. We're using leverage on this, but we're using it at it's high interest, of course, but that's kind of starting to come down a little bit. But it's high leverage and high interest rate, but it doesn't bother us a lot. So unlike most things where you have this really, really long construction time, we don't have this loan for terribly long. And so it winds up being not a massive amount of cost all in. So even at 85% leverage, 11.5% interest rate on this loan, which is now, on this loan, which is now about, just under 2.4, you can see, you got 100K of loan fees almost, but then on 240 days of interest, which is 9 months ish, which is probably longer than we think we need it. It's only adding, $180,000 worth of cost, $179,000 worth of cost. So, it just doesn't cost that much. The interest is not something that crushes the deal, so to speak. And then you've got, property tax, insurance, utilities, just a little bit of extra cost. So the total build is just under 3 million. And so really we only need to fund this particular deal only needs about $700,000, less than $700,000. So that's what goes in. The fund essentially would commit that capital out of its fund, out of the fund bank, let's say. And so what's the project return? So sale price about 660 per unit. Total revenue then would be just around 4, just under 4. You got some cost of sales, you got commissions to brokers, all that kind of stuff. So the net sale proceeds. So you're looking at an equity multiple of about 1.96, right? So what does that mean? It means you put in 690, you get 1.3 back at a fund level return. So that's pretty good. And it leaves a lot of room for being wrong. It leaves a lot of room for price to even go down a little bit and still do quite well. So, these deals are, and we're underwriting it fairly conservatively in terms of our sale price in this particular neighborhood. We believe that's a price we can command fairly easily. Again, we've added some guard band on the timing for the carrying cost of the loan. So all of this, makes sense. And we have predictability from the factory because we've sort of done this before, right? We know what these costs are. They don't inflate or balloon just because we get a good handle on what all of those costs are. So it's pretty lucrative stuff. And we've got a lot of Jeff and I were just out in Austin looking at more property. So we've got a lot of stuff in the pipeline that we're looking to fund more, to do more deals. Pecan Drive, another example of what we're doing. Same math, basically. So I won't belabor it. In this case, it's there was 9 homes here, 14,000 square feet, cost more to build. And so it's a slightly bigger loan, but all the math really kind of holds. So again, this needs about 925 of equity in, at 665 a unit, which is where we think we are there. You're just under 6 million of revenue of total sales, gross sales. Take out your cost of sale, you're about 2 million. So you're over 2x equity multiple in a really short time frame. Again, pretty exciting stuff. So we like it a lot. And we just wanted to share with you what we were doing because it's interesting. We think it might be the future, and we're really happy that we're early to it. This is our fund. For those of you that are interested, it's open to accredited investors, $50K to be part of it. That's our little website. That's Jeff's picture, my picture, our contact information. And I'm sure this recording will be shared with you by LPShares. And then I'll leave you lastly with this slide. If you want to schedule a call with us, just scan that QR code. It'll take you to a link and you can book some time on our calendars and talk with us more about the fund or this presentation, or just get to know you guys. We'd love to hear what you're doing, investing in, and share stories, because I think we always do a lot better together when we support each other as an investor and financial intelligence community, right? It's all about learning and collaborating. I say thank you. So thank you to all of you listening, but also thank you to Caitlin and all the good folks at LPShares that were very, very supportive of putting this together, this kind of educational webinar for all of you. They were fabulous to work with, super easy to work with. They've got a really interesting platform, and I want to thank them for this opportunity to share this with you and wish them great success. They've been fabulous to work with. So with that, I think we'll end a little bit early, but thank you all for being here with us today and for spending your valuable time with us. So thanks so much, and have a great rest of your day.
Thanks, everyone.